I think early in the morning, thanks for joining for this webinar. So actually today we'll be sharing on the myths of trading FX CFD. I think most people actually has been trading in equity, gold, but I'll say that relative to this FX Forex product, I think less people are trading. So actually we'll be sharing the more details about this. Okay, so before we actually begin our webinar, I think actually everyone enjoy travel. So actually this is one of the photo that I took in Taiwan during 2 years ago when I went for the sakura flower season at Qingjing. So actually during this period, most of us is not able to travel. But actually one thing is that before you do travel, right, one important thing that most people need to do is actually change your Sing dollars to the foreign currency. So this is actually about one kind of FX. So in terms of FX, right, it's actually a very big market. So there's actually in terms of FX, right, if you compare the size of this FX market to a normal equity market, the liquidity and the volume is around 20 to 25 times bigger. So in that case, right, actually you do not face such a lot of issue where this counter have is low volume, or maybe there's trading hot, or even after market hours they will have so-called corporate action that you are not able to take opportunity because of this FX product. So I'll be sharing about this FX product. So what our content outline today will be actually myths of FX CFD basics. Why do we want to trade FX product? Fundamental of analysis for FX product, trading discipline, and what CFD CFD actually offer for this FX product. So first thing is that there's quite a lot misconception on this. So do you think expert stock trader will make a good FX trader? Maybe you can just share your views whether do you, under the chat whether you think that expert stock trader will be actually a good FX trader. Later we'll discuss this along the way. Second thing is that we'll discuss is that there's quite a lot misconception that FX is just for short-term trading. So actually, what do you think about this FX product? Is it just for short-term trading, or actually you can also do long-term tradings? And the third misconception is that you need a large sum of money to trade FX because of the contract size. The contract size used for FX used to be actually a contract size in terms of 100K. So you need to, as we go along the way, we'll discuss about this myth. And also, the last one is that a lot of people think that because you want to trade FX product is actually a 24 hours market. Do you really need to actually stay at in front of your screen to look at this FX product 24 hours to be actually successful? So before we talk about all this myth, right, we'll go into the basic of FX. So actually FX CFD is actually a form of CFD that allow client to trade the underlying spot Forex. So we have quite a lot of major pairs. I think we have over 29 to 30 major pairs already, and we are adding more in the coming few weeks. Later we'll share about what pairs we are going to add on. Also, we are FX CFD, right? It's actually a for us. Is just now we talk about this, right? It's actually a minimum contract size of 10K. So for why we come up with 10K is actually more manageable for the retail client. So you can see actually the contract size is how is it like? So when we talk about FX, it's actually referring to the Forex exchange. It means that you come to this market, everyone will be trading currency. So when we trade, let's say if we go to a money exchanger, before we actually exchange for money, we actually agree on a certain currency rate before you even make the transaction. So actually FX is traded at OTC instead of a centralized market. So how you actually can differentiate between a centralized market and a decentralized market. For a centralized market, you talk about it's actually like stock market where you about SGX, New York Stock Exchange. So all these single orders, right? All these orders are routed to a single location. So you only see actually one bid price and one asking price. However, in a decentralized market, if you go to a money exchanger, you can see all the money exchanger have different pricing. So this is actually a decentralized market. So is that each participant will be actually able to transact with each other directly. But do think note that this OTC doesn't mean that you have to do it offline. You can actually do it online through the Points website. So actually for Forex, right, we have give you access to a global market, because for stock market, you know there's quite a lot of different stock market in US, Hong Kong, Japan, Singapore. Even in Forex, right, actually give you opportunity to trade in all the different markets also. So these are the pairs that we can. So how do we actually understand Forex? I think most of you actually go to money exchanger before you actually travel overseas. So you can see actually there's always three FX pair are always quoted in 3-letter code. So for example, if you are talking about Aussie, you remember always as AUD, pound, then it will be GBP, and USD I think is dollars. So actually quite a lot of pairs, right, are traded with USD dollars. So it's one of the most top traded pair in the FX market. So next thing is that when you want to trade FX, right, you need to also understand about decimal place. So you usually see quite a lot of decimal place behind. So in the terms, right, we also have one pips refer to the one movement of this FX pair. So for some pairs, right, we actually have like pound/USD. We actually offer up to the 5 decimal place. And if we talk about 1 pips, right, it's actually referred to the 4th decimal place. For pairs that are against Japanese yen, because of the exchange, right, actually we offer up to 3 decimal place, and the 1 pips actually refer to the 2nd decimal place. So for 1 pips on the 100K is actually, if you are talking about the contracts for USD, right, it's about 10 USD. If it's contract for 10K, it's actually 1 USD. So why we come out with 10K is actually more manageable for retail client, for us also, because it's that in case you want to scale out, let's say I want to purchase 20K, 30K, I can actually scale up accordingly. So it's actually more manageable for all of us to actually trade in the FX. So next thing is that you understand there's always 2 quoted. It's like unlike stock market where you can see it's just money against the stock price. But in the FX, right, you can talk about this is actually there's always a base pair and a term currency. So the easiest way to actually remember, right, just take a look at your left hand side. It's always base currency. Right hand side will be the term currency. So when you enter any buy or sell transaction, right, we have to refer to the base currency. Opposite transaction will take place in the term currency. Let's say we are buying pound/USD, means that actually are buying pound, selling USD dollar. For example, we are going to Malaysia to do shopping. So actually we are buying ringgit, selling Sing dollars. So actually, I think everyone actually understand this concept quite easily, because most of us have traveled overseas and you know how to actually do money exchange and look out for the rates. So to understand this is that just let's say pound/USD is actually 1.3, means that 1 pound can be exchanged for 1.3 USD. If it's 1.45, means that 1 pound can be exchanged for 1.45. So actually based on this, right, in terms of when you're doing tradings, all this profit and loss will be actually reflected on the term currency, means your right hand side currency, USD dollars. So actually how to really calculate profit and loss. Let's say I do a long contract. I bought at 1.3, subsequently over the next few weeks actually go up to 1.45. So I just have to take the final minus the initial price, multiply, let's say I only bought 1 contract, so it's 10K. So from there I can actually calculate what is my profit. So my profit is actually USD 1,500. However, sometimes we do trading, instead of going up, the price actually can come down. So if you just same thing, how to do the profit and loss, just take the final minus the initial, multiply by the contract size to get the negative USD 500. So when we trade in FX, right, because when you trade in stock market, there's always a bid and ask price. Same thing for Forex, there always be a bid and asking price. So actually, this is how you look at when later we'll go to the platform to show more on that. We also have a so-called screen that they show the low of the day, high of the day, and in between, right, is actually the spread between the bid and asking price. So another thing is that you need to understand is that if you are trading just a CFD, you actually do need to pay for financing charges. Because why we need to pay for financing charges? Let's say you do a contract, you long a position. So actually back end they actually need to borrow the shares on your behalf. And also so when the person lend out their shares, right, they'll actually be getting some return. So when you borrow these shares, right, so these financing charges will actually go to the lenders. But unlike in Forex, there's no financing charges. What you talk about is actually swap points. So how swap points really come about is that you know that actually different currency pair will have different interest rate. So currency pair, like for example Sing dollars, you can understand is recently the interest rate environment, Sing dollars interest rate is actually coming down as well. I can't remember the last one is coming. I think used to be 1 point something, slowly coming down. So all these swap points, right, is actually due to the interest rate difference between the bought and the sold. So when you hold a position overnight past the 5 a.m. Singapore timing, your position right can gain in terms of swap points or lose swap points. So later we also have a feature that actually can tell you whether you hold this position overnight, you'll be actually gaining swap points or losing. You need to pay for swap point. So how to actually calculate this in how is the back end calculate is that when you hold a currency pair that you bought, you earn the interest, and the currency pair that you sold, right, you have to pay for the interest. So this is how actually swap points come up. So next thing is that many people will be asking, why should I actually trade in FX CFD? Why can't I trade in equity? So just now we talked about financing charges is one of the things that you can consider why you want to go into FX market. So actually, just now you also mentioned that if you talk about FX market, it's actually one of the largest and most liquid financial market. So it's actually, I would say that out of all the financial market, right, actually FX is the biggest. So you can see actually the trading volume, right, can exceed over USD 5 trillion. If you compare to a normal equity market with an average daily trading volume of around 200 billion, right? So it's already around 20 to 25 times. So in the participant, right, actually range for a lot retail trader to financial institute, hedge fund, and even the central bank. So you can see how important FX market is, especially if for companies, right, when they are actually going overseas to do business. So to do business in overseas, they actually have to, let's say, DBS going to India, maybe Malaysia to do business. So actually, when they are doing business, they have to have the ringgit currency. So in that case, they have to change the Sing dollar to the ringgit. So you can see that in the global market, right, FX market is on the daily basis, right, there's a lot of currency being traded because you need to do the exchange. So that's why it's one of the largest and most liquid financial market. So first reason why we want to trade FX is actually, for FX, right, it's actually traded 24 hours a day, 5 days a week. So this means that you can find trading opportunity anytime. Let's say at night you can't really sleep. Actually, then you can wake up and see the chart. If you find trading opportunity, you can also enter a trade. Another reason is that if you are trading equity, right, so sometimes if you see that after market hour close, then company actually announce some major news. By the next day when you want to enter, look at the trading position, actually the price might have already moved up or moved down already. So in FX, right, because it's traded 24 hours, so actually you won't miss this kind of opportunity. Like let's say suddenly if there's some news announced, you can actually take opportunity, or you can actually close off your position in case you want to actually do a cut loss. So next thing about FX CFD is actually the first zero commission product at our company PhillipCapital launched. So we are also starting to work on this toward the future. So because of zero commission means that you can even do a trade, make a few dollars, and you just close off the trade. So next is that Forex trading is both bi-directional. Means that you can do a long position or you can do a short position. And also we come with, just now we talk about liquidity. Liquidity is very important when you are doing trading, because if you trade in a product that do not have liquidity, so you want to get in and get out of position, right? You usually see if you see some of this penny stock or some stock, right, the bid and ask spread is very huge. So if you want to get out and get in a position, you may be really losing a few percentage already. So in Forex, right, usually don't see this issue because of the high liquidity in the market. So next thing is that because of FX CFD, all this actually come with leverages. So leverages can help you actually amplify your return, but I do think that they can also amplify your loss. So that's why later we'll talk about risk management for when you're having leverage product. Also, next thing is that free platform currently is only we are trading on Buoyance 2.0 and Buoyance Mobile, and we are actually back end. I would say that in the next, can't promise you the date, but we are looking out to expand our platform in terms of this FX CFD product. Also, one thing is that for FX, right, no one can corner the market because of the huge liquidity in the market. Not like, for example, sometimes if you are doing equity trading, if you make use of this market depth, right, you can see actually for this stock, right, it can be so-called range bound for a long period of time because you can see that huge wall are placed, buy and sell wall are placed when the fund house or institute they are doing loading or offloading of their shares. But in FX, because of the huge liquidity, no one can actually corner the market. So just now we mentioned that do a stock trader really make a good FX trader? Do take note that all financial products trade differently. Let's say you are trading stock and you are trading commodities, you are trading FX, you have actually looking in terms of all different kind of factors. Like if you are trading commodities, you have to see the supply and demand, and also what is the outlook for the economy. So that's why you can see that for commodity like gold, all this is speculative. So that's why they can be actually quite different. So if you just do the comparison between stock and FX, right? So for stock wise, it's actually traded during the business hour, means that when the stock market is open. But for FX, it's a 24-hour trading. So actually, it offers a lot of trading opportunities around the clock. Next thing is actually stock market. Most of the stock prices, right, actually react to the economic sector outlook and earnings news. So I would say that the main factor that actually affect the stock, right, is actually their earnings outlook and also earning expectation. Because if their earnings by expectation for the future is going to be high, so you can see that actually the share price start to go up. But for FX, right, they actually react more towards the economy news and the macro news. They don't actually react to earnings because FX don't have any earnings at all. So in terms of in stock, right, there's quite a lot of corporate action. Like for example, recently Sembcorp Marine went go for the rights issue. So there'll be actually quite a lot of corporate action surrounding this, and people will be asking about this. So you can see that actually stock, right, there's quite a lot of corporate action. And when there's corporate action, there will be also trading halt. Means that you can't take opportunity during that period also. So any corporate action, right, can actually affect the share price. Like for example, when they pay out dividend or when there's a stock split or reverse split. However, for FX, right, there's actually no corporate action at all. The next thing is that stock market, because many different stock market, right, actually offer you to trade in different exchanges around the world. But for FX, right, actually all these FX pair, right, actually there will be actually 8 to 9 major pairs. Just now we talk about USD, Euro, Japanese Yen, Aussie. So these are the major currency pairs. So actually all these, right, will be trading volume will actually be surrounded around this major currency pair. For stock wise, we offer up to a leverage of 10 times, but for FX actually up to a leverage of 20 times. But do take note, leverage is actually can amplify your return, but also can amplify your loss. So that's why it's very important that you handle carefully. And stock market, right, liquidity varies on day-to-day basis. If you look at the daily trading volume, you see that every days, right, you can see that actually the top 30 volume, if you look in terms of SGR, right, it can change with on the day-to-day basis. I would say that for the past few weeks to past few months, some of this daily trading volume is surrounding all these medical stock, growth stocks. But for FX, right, actually most of the liquidity are actually surround the major pairs, the 8 to 9 major pairs. So it's very easily for you to actually think note which pair you want to trade and get in and get out of the position easily. So next thing is people will be asking whether FX is it just for short-term trading? But because everyone thought it's short-term trading, but actually it's also possible to do long-term trading, means that you do a position trading. So actually when you are doing long-term trading, right, you need to actually understand the macro and the economic outlook for this currency pair. Like for example, we just talk about maybe we just talk about Sing dollars. So if you are going to long or short the position Sing dollars against other currency pair, you need to know what is the economic outlook for Singapore. And also you need to know the interest rate and the GDP growth for the Singapore pair. And also for the pairs maybe against USD. So you need to know the macro and the economic outlook for these both currency pair. So in that case, right, because there's also swap points, that's how if you hold a position overnight, you can actually gain swap points or you can pay for swap points. So actually we come up with this feature, right? Because some people intend to actually hold FX position overnight for a long period of time. So what they want to do is actually you need to know what the swap points. So actually you come out with this new feature about FX swap heat map. So using this swap heat map, right, you can know whether you are going to gain a so-called hold the position overnight, you're going to get a positive swap point or you have to pay for the negative swap point. So actually this is how the heat map really look like. Later we'll go to the website. So actually we'll show you the distribution of the buy and sell swap points when you hold a position overnight. So how this calculation, they already show a calculation is based on the difference in the interest rate between the FX pair that you are trading. So just now I mentioned can gain swap, so-called I would say that swap points can be gained or lose overnight. But I do think that sometimes can be subjected to daily changes, especially when the central banks, right, announce that there's change of interest rate. So actually this can actually affect the swap points also. So that's why past history might not be indicative, but how often the central bank actually change the interest rate, you can actually look at the economic calendar and make use of that. So just now we see that there's two different colors. So the blue is actually means that you are be getting a positive value. So if it's lighter blue or darker blue means that you are going to get more interest when you hold this position overnight, so, as compared to a lighter blue. The red means that a negative value means that you have to pay for the swap point. If it's a darker red as compared to a lighter red means that you have to pay more when you hold the position overnight. So as long you hold this existing position overnight as past the 5 AM, right? So actually interest adjustment will be actually due on a daily basis and will be credited or debited into a CFD account in terms of interest adjustment, and it will be reflected in your daily statement when you're holding a position overnight. So fluctuation in the interest rate pair, right, may also cause sometimes from positive to become negative because of this maybe the change in the central bank government on the interest rate. So a higher value on the interest rate adjustment may be also sometimes expected if the value of this underlying pair, right, is across a weekend or a holiday. So we'll uncover the third myth. So actually a lot of people say that contract 10K means you need to put upfront of 10K, but in reality, right, it's not the case. So this, let's say we use this Euro/USD for example. So actually I want to buy a contract size for 1, so it's actually 10K. You multiply by the price, so actually you get your contract size. So 1.7899 multiplied by 10K, you get this USD contract 11789.9. But because just now you mentioned that there's the leverage involved, so you to trade open this position, right, you actually need an upfront of 809.73 Sing dollars to open the position. So for FX, right, you only require a 5% margin requirement. So for people who are trading, right, may not need to upfront and come up with your huge capital to trade in terms of the FX. However, remember, leverage is always a double-edged sword. It can amplify your return, but amplify your loss also. So you need to handle it carefully. So next thing is that there's quite a lot of people have a misconception on trading Forex. So if you want to trade Forex, because it's traded 24 hours, do you really need to sit in front of the screen and look at it for 24 hours? Actually, in the case, right, it's not the case, because not all the hours of the day are equally good for trading. Because for FX market, right, there'll be a certain period that will be more active and certain period there'll be less active. So the best time to trade is when the market is most active. So actually how to tell, right? So actually there are some popular market operation. For example, in the morning, maybe around in Singapore timing, right, maybe around 7 to around 9 p.m. people will be actually looking at Tokyo and Sydney market where they'll be open. So during this period, the FX pair will be actually more active. Subsequently, in the afternoon, the FX pair that will be because the next biggest FX market, one of the biggest FX market is actually London. So for London, right, they open around 3 to 4 p.m. And also most of the Europe country that open their operation around this period of timing. So during this timing, this FX market will be also quite active. And towards the nights, right, you see that actually New York market start to be more active. So around 9 p.m., you can see actually FX markets start to be already active. So it's better to trade during this period of time. So actually during each period of time, right, there'll be different pairs that is active. Like for example, early in the morning, you'll be actually pairs that are active will be actually Japanese yen, any pairs that are against Aussie and New Zealand and Singapore, Hong Kong, China. Then towards the afternoon, pairs that will be more active will be actually Euro, British Pound. Then towards the night, any pair that's again USD. So next thing is that because we know that there are quite a lot of factors that actually affect the FX market, so we need to be discussing what are the factors that will be discussing affecting this FX market. So one of the we'll be actually using economic data is actually one of essential for FX trader, because like for example, if you are trading stock, you'll be looking down in terms of earnings and also any corporate news. But in terms of FX expert, because there's no such thing, so we only can look out for economic data. So actually economic data will help to actually create volatility and also speculation. So for speculation, you can help you to actually create also opportunity. So using all these economic data, right, you can establish new position, or if you are holding an existing position, can support whether your existing position should you hold longer or whether you should actually cut your position with it. So today we only just be discussing three different simple factor: GDP, CPI, and NSP. So GDP, I think everyone know about this GDP. So GDP is actually the total market value of all the goods and services produced in a particular country. Like for example, Singapore, I think recently, just yesterday, they actually talked about the GDP growth is actually negative for this year. So how actually we get all this data for GDP, right? It's based on your consumption, investment, government spending and investment, and also net export. So based on all these four different factors, they add up the total amount. That's how actually they get out the GDP. So because of this COVID-19, you can see that actually I would say that it will definitely affect our investment, consumption, and also export and import, right? All this will be also affected, because Singapore is actually a country that actually depend on export quite a lot. So that's why during this period, actually GDP will be actually significantly affected. So how to actually, there will be actually when country announce GDP, right, there'll be three reactions. So let's say, because economists, right, will always try to come up with a figure, what is the expected GDP for the previous quarter. So in case when they announce the result, right, so let's say the announced GDP is actually lower than the expected GDP. So there will be actually a possible sell-off for this our domestic currency against the other currency pair, because everyone is lower than expectation, so they will sell off this. And if it's mixed expectation, right, sometimes I would say that usually if it's mixed expectation, then maybe the people will be thinking you'll be focusing on what is the outlook of the GDP, whether the future upcoming GDPs will be good or bad. However, if GDP is a bit the expectation, it can actually help you to possibly strengthen the domestic currency against others pair. So this is one of the way that you can make use of GDP to look at the different currency pair. Next thing is CPI. It's actually a measurement of inflation in the economy in relation to all the costs of goods and services. Means your daily all these services include quite a lot. Your purchasing you purchased on your daily necessity, all this, right, you'll make use of this calculation. So for CPI, right, so how actually so-called the central bank works is that in case if inflation is too low, actually central bank will actually cut interest rate to actually spur economic activity. So you can see that actually in the recent few quarter, I would say the past 2 quarter, right? Actually, you can see that actually central bank are actually trying to cut their interest rate because of this COVID-19. Actually, they affect the overall economy. So they actually cut interest rate because when they cut interest rate, right? So it's for businesses to encourage businesses to actually borrow the money and so expand to create economic activity to bring up the GDP indirectly. So when actually sometime when inflation is too high, actually central bank will also raise interest rate to stabilize the price. Stabilize means that they increase the interest rate because when you increase interest rates, businesses will actually cut down on borrowings. So actually help to slow down the economic activity to prevent overheating. So for interest rate, right, when central bank actually announce their interest rate, right, then can actually affect the attractiveness of holding this currency pair. So let's say if one currency pair is A is actually giving you maybe returns of around 2%. However, another currency pair is actually just only 0.5%. So there's more likelihood that you will actually be holding this interest, putting your funds in the currency pair that give you 2% because it's more attractive as compared to the currency pair that give you 0.5%. So it's important for us to look out for this CPI, whether they are going to actually central bank government, whether they are going to cut or rise interest rate. So that if it's going to cut, right, means that cut interest rate means that this currency pair will become less attractive to hold. However, if they are going to increase, right, actually become more attractive to hold this currency pair also. So this CPI is one of the indicators that will help to look out when we are trading FX pair. So next thing is actually non-farm payroll. This one is I would say that is one of the key economic indicator for US. Okay, just now when you talk about CPI and GDP, right, actually it can be used for all the different country. It means there are different currency pair. But for NSP, right, it's specific for US. So actually for US dollar is one of the most popular traded pair against other currency. So non-farm payroll actually represent the total number of paid workers in the US minus the farm employees, government employees, private house employees, employees of the non-profit organization. So there will be actually also 3 reactions during this non-farm payroll. So actually when you are trading on news on MSP, right, there will be actually 3 reactions. So in case there's a higher payroll figure than expectation, it can actually help strengthen the US dollars against other currency pair. If it's just make expectation, can be mixed because we have to look out for more, like whether what is the upcoming outlook of this NSP, whether is it going to be good or going to be bad. I think the last one is that I think there's an error. For this one, it should be actually lower. If it's a lower payroll figure than expectation, right, it can actually possible weaken the US dollars against other currency pair. So actually, for non-farm payroll, right, if you really look at non-farm payroll period, sometimes this FX pair, right, we can move in terms of a few hundred pips. We can swing up and down of a few hundred pips. So if you are actually trading in terms of non-farm payroll news, right, you have to be very careful because it's very highly volatile during that period. So you have to actually set your stop loss. So when we are trading, right, because of the FX, right, actually that's important for us to, of the average is important to have trading discipline. So actually for trading discipline, we'll talk about risk reward ratio, stop loss for every trade, and capital to risk per trade. So when you are trading, right, you always have to balance your risk and reward. It doesn't make sense. Like let's say I risk $100 to only get a reward of maybe $1. So that's why it's very important for you to manage the risk and rewards. So no matter what market you are going to trade, right, there'll be carry a certain number of risks, and you also want to be actually compensated for this risk that you are going to take. So that's why a lot of traders actually make use of risk reward ratio to actually compute the expected return of this investment. But in reality, right, I think most of I would say that most of retail trader, right, they don't really make use of risk reward ratio. Only those professional trader, they will make use of risk reward ratio. Retail trader always just put in the money and trade, but they don't actually make use of this reward ratio because sometimes, let's say if you keep on losing on your trade, right, and you didn't balance out this reward ratio, then actually end up you can lose your whole capital also. So optimal risk reward ratio actually varies different among different trading strategy, whether you are actually trading short term or you're actually holding this position, trading this position for long term. Also, everyone have different tolerance for risk. So for example, I'm comfortable maybe with a 5% risk loss, but actually another person maybe only be comfortable with a 2% loss. So you have to various tolerance against it. And also why you do so-called risk reward ratio, because let's say in case there's a false breakout, you see that actually they break out but suddenly they actually come down again. So sometimes we experience false breakout in terms of FX, different type of stock trading also you can experience false breakout. So in that case, when they suddenly turn down, right, actually we have a so-called, we also have what is our expected loss, we cut our loss. But do remember, risk reward doesn't give you any indication of probability. Like for example, you talk about maybe about total $1 can actually win you a few $1,000,000, but the probability of winning a trade is actually very, very low. So actually there are kind of with a table. Let's say if you are using a risk reward, let's say if you don't calculate your risk reward, like for example, every one how to say, your risk reward ratio is actually 0.5, and if your winning rate is just 50%, right, you can see for your total profit, let's say do trade, right, actually your total profit is 100, but your total loss can be 1,000. End up you have actually net profit is actually negative 50%. However, if you actually risk reward ratio is actually 1, and if your winning rate is 50%, actually you'll be actually be net 0. However, if actually a risk reward ratio of 2, and if you can actually achieve a winning rate of 50%, actually that means that you get a total profit around 2,000 for every 1,000 loss. So actually that's your net profit of 100%. So actually if you do a balance this risk rewards against the probability of winning a trade, so you can see actually over here, right, what is the using this risk reward ratio, you can see if what is the probability of winning a trade for you to actually become in the overall profit. Because when we all do trading, right, it cannot be 100% that we are always right. No matter how accurate we are, you try to do a lot of analysis, try to do everything, but sometimes you will still encounter loss because of unexpected news or unexpected. So that's why it's very important to balance this out. So sometimes when we really need to cut loss, I think you just have to really cut the loss. So no point. So one thing is that also no point focusing on a risk reward ratio if your probability of winning the trade is low. If your probability of winning the trade is just 10-20%, right, then you may want to revisit your trading strategy, how to actually improve on that already. So there are some steps to actually calculate risk reward step to follow. So actually you have to, when you enter a trade, you can actually calculate what is the estimated take profit that you want to get. And also you have to estimate your target stop loss, then from there you can calculate your risk reward ratio. Then from there you can, if it's below your threshold, let's say my risk reward ratio, I should be looking out in terms of 2 times. If it's actually just 1.5 times, like sometimes it's actually better not for me to take the trade. So next thing is that other than risk reward, you need to have a stop loss for every trade. So one of the most common mistake among most traders is also not putting a stop loss, especially in CFD. We actually, for us, right, we always every day, right, we have to actually call a lot of clients about margin call, inform them about margin call, do a top up, or if they can't do a top up, right, they have to actually liquidate their position. So we encounter all this quite frequently. Actually, we always encourage our client, let's say if you enter trade, you need to really put a stop loss. I have encountered one client, right, actually he hold a DBS position when he short at a few years back, short at $18. Imagine when the $18 that time when DBS go up to $31. Every day, every few days, right, we have to actually ask him to do a top up. So you can imagine trying to hold a position over a long period of time, from 18 to 31. Imagine how much loss that client have to put in to top up. So it's like very important. Sometimes it's, let's say you are trying to short the position, but if it really breaks certain levels, resistance level, right, then you have to actually just do a cut loss and go on to look out for another trading opportunity. No point putting your sum stuck in there, right, and holding the position for a long period of time. Although maybe now you recently only come back, but imagine during this 3 to 4 years period, you are holding a loss position, and every time you have to do top up before actually the price actually start to reverse. So sometimes it's actually really better for you to have a stop loss, cut the position, and look out for any trading opportunity. Means that because you put your money and every time you do top up, you are losing your trading opportunity in other stock or FX already. So stop loss is actually orders that actually automatically cut your position when your stock trade hit a certain criteria. So one of the order will be actually stop limit order. Is order to so-called you can because this one is from a stock, so but you can actually use it on FX and indices also. So when they reach a certain price, then you have a stop price trigger. Then when the price trigger, right, so-called your stop, the real limit order will become active and execute at a specific price or better. So one thing is that before you are using a stop loss, right, you need to actually consider some of this. For limit orders, right, sometimes it may not be actually executed in case the price is actually moving very fast from the specific price. Because sometimes if you talk about trading, it's actually very fast movements, especially non-farm payroll. So when it reach the trigger, the next thing is that they draw maybe another 10-20 pips already. So when your stop limit order really come into the market, right, it may not be already, the price already may have moved off already. Also, sometimes if you do market do fluctuate, so they can also activate your limit order, and also, so that's why you need to actually look at the underlying asset that you are going to trade, whether is it very volatile or not volatile. Then from there you can actually look at the price movement, how much movement they move. From there you can actually set your stop limit orders. And also just not because we will talk about OCO, because actually it's one of the features that we'll be going to launch, because when we actually currently only have the stop limit order, so upcoming we will also have market orders and OCO orders. I would say that most likely they are actually going to launch this new OCO, because for normal CFD product we already have OCO order, but for the FX we are going to launch this OCO order in the upcoming month. So this is one of the new feature that you are going to launch. So actually OCO order consists of 2 orders. One is actually your take profit order. Another one is actually your stop loss. So in case of any execution, one order is executed, the other order will be actually automatically cancelled. So for OCO limit order, you use it for taking your profit. Then for the OCO stop order, you use it to cut loss. But some people, they actually use OCO order differently. So actually OCO, right, can be also used for trading breakout, because especially when price range is so-called restricted inside a range bound period for a long period of time. So when you will be looking out for any trade of breakout, right, you can also make use of OC order, whether is it going to break to the upside or break to the downside. So although OCO is usually used for taking profit and stop loss, but you can actually use all these orders to enter new position also. Same for the stop limit order just I mentioned. So sometimes if you look at this, right, when the price actually break the support level, you expect the price to actually drop further to the next support level. So you can also use that to initiate new position. So I think for us, right, next month because we actually talk about, in my previous webinar, we actually talk about more about all these different order type for CFD. So in our upcoming webinar, maybe around September, we'll be planning for a webinar on more about all these kind of orders, how you can actually utilize in your trading. So next thing is that capital to lose on the trade. So no matter, just I mentioned, no matter how much research study you have done, you'll actually encounter a loss. That's why you cannot put 100% capital to trade on a trade. We see that happen for quite a lot of clients. Like for example, you think DBS is going to go up, so you put 100%. If it really go up, yeah, you will actually benefit. However, in case it suddenly come down, all your capital will be actually trapped inside this position, and you can't actually do anything if you find another trading opportunity unless you have spare cash outside. So actually loss can easily get out of hand if not controlled, especially with leverage product. That's why you need to actually limit your loss. So one of the most common way everyone is sharing online is actually the 2% rule. So you do not risk more than 2% of your total amount of your trading capital. So, but do take note, because capital to risk may varies among different people also. So let's have an example. Let's say you have 10K, and for your first trade, make a loss of 20%, means that you left 8K. And from that 8K to go back to 10K, you need to make a existing 2K. 2K out of this 8K is actually a gain of 25%. However, if you actually make a loss of 200, and to second trade, let's say you want to get back to the 100% 10K, actually you just need to make a gain of 2.04%. So that's why it's very important to set stop loss. So some people, they don't really set stop loss, and so means that just if they encounter margin call, they just do top up as I mentioned just now. It really doesn't make sense, because you're let's say you keep on doing top up, but you can't actually enter any new trade. So actually you limit during this few years, right? You actually limit all your cash, right, stuck in a position where you still have to take advantage of any trading opportunity out in the market already. That's why it's very important to have a stop loss also. Also is do not take more risk than what you can handle also. So some key points to talk about this risk management. First of all, always trade for a risk reward ratio, whether is it worth taking. If it's below your threshold, then maybe you might not consider taking. And also do not overtrade on like risk 100% on the trade. Always have a stop loss for every trade. And one thing is that a good habit for a good trader, right? Usually they have a trading journal. Like for example, each trade they write down the reason and why they enter this trade. Then they can do a review. So through the journal, right, can see how your trading strategy perform. If it's not doing well, let's say, my trading strategy used to give me maybe 60% of the winning probability. However, suddenly actually the winning percent maybe only for the past few weeks maybe drops to around 10 to 20%. In that case, when you have a trading journal, right, you look back, maybe you want to review your trading. How come is it really start to not perform that well? So maybe you want to improvise your trading strategy already. So last thing is that what we will actually offer. I think many people have asked us the same question quite a lot of times. Why actually Phillip Security want to come out with FX product when there's Phillip CFD, there's Phillip Futures that offering the FX product. One thing is that because for Phillip Security, we come out with this is that we want to be a one-stop shop solution for our client, where they can trade stock, CFD, ETF, FX, commodity, bonds, unit trust on one single platform. But do take note that we are also going to launch, I would say that currently in the back end, the operation team, right, and the FX team, they are trying to come up with a new platform that will be actually more conducive in case you want to do any trading. And just highlight on some of our spread. This is actually Phillip Security. Actually, I would say that for our most major pairs, right, actually we are quite competitive in terms of the spread. Can do a comparison to our competitor, and we are slowly adding. This is the initial 8 pairs that we launched. We have actually launched up to around 30 pairs already, and we are going to launch new pairs coming soon also. So what we offer is that all the profit and loss just now we calculate in terms of respective term currency. So easy to remember, just now we talk about term currency on the right hand side, and swap points will actually be processed daily. So position holding overnight past 5 AM, depending whether you are getting a positive swap point or negative swap point. And for 5% margin requirement for all the foreign currency pair, currently you have around 30 pairs. This is what we offer. So just now I mentioned there will be upcoming platform. Actually, we are looking in terms of MT5 for this kind of platform, how to actually incorporate them. And the OCO and market order will actually coming up in the next near future, maybe around end of next month or maybe start of October, depending. Because when we come up with new features, right, we also need to do testing, make sure it's stabilized before actually launch out new feature. So for charting wise, it's already available. So all this will be based on the mid price. So how do you actually understand mid price? Let's say you see the FX pair is 1.1 and 1.2. So based on mid price charting, right, means that they'll take the average middle of this, so it's 1.15. So just now, later I'll go to show where we can find the heat map to understand about heat map. Then we actually have a Chinese yen pair that will be actually coming out end of this month. So actually currently they are already doing testing over the weekends or this to prepare for this launch of this FX Chinese yen pair. So the beta version you'll have a soft launch around end of this August. So you can keep a lookout for that. So to actually trade in CFD, you need to actually pass the CK to be eligible to trade in CFD. In case you fail, right, you need to actually go to the SIP ABS website to take an online quiz and subsequently send us the cert. Currently, we have ongoing promotion $80 for new client who or existing client who have not traded in CFD or existing client who have not traded in CFD in 2020. So actually, you can understand more about this promotion when you visit this link. And if you actually become a frequent trader, there will also be actually trading with base credit that will be actually credited on a monthly basis when they do crediting to you. And so if you refer a friend to actually trade in CFD, you also get CFD trading credit. So actually we have quite a lot upcoming past webinar. So actually all our webinars, right, you can find the recording, whether is it TA or FA, because I actually talk about technical analysis before, support resistor, Fibonacci, even fundamental, where you talk about how to actually analyze a stock, REITs, all these populars, right? You can actually visit our website. Through first website, you can visit the Phillip CFD website. From there, actually you click on the education videos to see the past recording. We also put our recording on PhillipCapital Facebook group, and some people actually prefer YouTube. We also put on YouTube. And for our upcoming webinars, right, they'll be actually finding on the 24th of, we'll actually be talking about gold and silver, because I think we did some gold and silver trading webinars in around, I think I can't remember the exact, it should be around February or March, where we actually look in terms of the gold silver ratio. We see that actually silver ratio have actually more potential upside. So you can see actually when silver start to run, they'll be running very fast, but when they actually start to come down, they also can come down very fast because of this gold silver ratio. So you can actually we'll be sharing this again. Then for people who want to look out for to build up passive income, for me, I'm also more towards passive, building my own passive income with stock. So we'll be having a webinar on 24th of August also. Upcoming, we have also another 2 CFD webinar to talk about this. Then the other CFD order types will be actually in September. The exact date can't confirm yet, so that's why I haven't put here yet. So here's the disclaimer and here's the feedback. So maybe what I will show is some I will show some links that you can share. Give me a moment. So maybe I go to the CFD website. So let's say I just go to Phillip CFD website. So I actually want to understand about look out for education video. So I actually go to education. So here are the upcoming events that we have for our webinars. For past recordings, right, you can visit here. So actually my colleague recently talked about in Chinese about CFD. Then also if you are interested to find out others like REITs, right, we also share about REITs previously. So you can visit all these links to see all our past recordings. Then in case you want to look out for trading any trading opportunity, sometimes we also have shown over here. The next thing is that you want to understand about market, right? Sometimes we also talk about stock that you can look out interesting article that you can look out. We actually write our own articles. Then the tools that for heat map. So this is the heat map that will show that will be actually doing updates. So how to actually make use of this, you can read out all this. We are still trying to improve on this FX swap heat map. So you'll be seeing more feature updated in the coming few weeks or so. So this is how to actually understand about this heat map. Next thing that because people also want to understand other trading opportunities. So actually you can visit our research analyst website, Stock BNB. So they have give you a lot of fundamental views. If you are looking for a technical, right, you go to the technical pulse. From here you can see look out for trading ideas on the stock or the indices or the gold. We'll be sharing over here. Also, people always ask about, because CFD ledger is actually a separate system to funding system from stock. So you need to actually transfer from stock to CFD if you actually deposit funds to your stock. So there's another way actually you can do payment directly to your CFD account. So in case you go to CFD account, you can actually use PayNow. So PayNow is, I would say that we actually encourage clients, if you want to do deposit funds to your stock or CFD, use PayNow feature because it's very easy. Just have to look out for the UNE number, key in them. Subsequently, you can key in your account number. In case you want to actually submit the funds to a CFD, you just have to add the CFD behind. Do not add any other kind of letter behind or any. Just key in your 7-account digit number, and whether if you want CFD, you put CFD. If not stock, you just leave it blank. Then after that, you can the funds can be actually directly credited to your account, and it's actually put updated every 15 minutes. So they actually make it use, like for example, recently I have one client on the election day recently, right? Actually, you want to do funding of an account, but if you actually do funding to a stock site, you cannot do trade. So actually, I asked him to use the PayNow, directly credit the funds to CFD, then he can actually take trading opportunity. So now I'll go to the platform. So if you go to your account management, you want to fill up the CKC card, you actually need to fill up over here. Then subsequently, you want to open CFD account, you go to account management stock, online forms, then you fill up the forms that they will tell you whether you are actually able to trade CFD. Next thing is how to look out for FX. So actually, if you are trading stock, right, you can see you want to be a one-stop shop solution. So trade stock. So you can see actually the trading volume varies every day also. Then CFD, you can select CFD. So you actually have gold and silver product and also indices if you are trading. Then if you are trading FX, you click on the FX. This one is the line view, but some people actually don't really like line view. Just click on this, switch to the panel view. From here, you can see actually the bid and ask, the low and the high of the day, and also the bid, the spread. So I think that currently you can see all the difference. So over weekend, the market is not trading. So other than CFD, I actually offer DMA. DMA is actually direct market access for Singapore market. Because for the difference between CFD actually involve a market maker. So whether they'll match your orders, if not, they'll do hedge on the market. But for DMA, right, for Singapore market, they can actually go directly to the exchange. Because of this, right, so actually with DMA, you can actually participate in the pre-opening and pre-closing, means that you can place trade before the market open and market after the market close at the 8:58 and also the 5+. So actually we'll be also sharing let me go see the Q&A portion. The link for okay, someone asked about the link for building webinar on the building passive income. So I think this one should be a quite interesting topic because it's a new topic that I come out recently. If you want to join that, let me get the link. Okay. I'll share the link in the chat to make it easier for you. Okay, the next question that. So okay, if you are actually trading FX, right? Actually, just want to talk about FX. There's no trading commission, but if you are trading FX CFD, there's no trading commission. But if you are trading stock, right, there'll be actually trade or indices, right, there'll be trading commission. So in case you want to find out all this about the trading commission, right, actually you can go to price. Let's say I want to trade because recently everyone is interested to trade in gold and silver. So I will show the gold and silver details over here. So actually the commission they tell you what is the commission to trade in gold is actually USD $1 per site per contract. But do take note for other than FX, right, all other position, right, you will have actually long and short financing charges. So long and short financing charges will depend on the supply and demand. So commission wise, you actually can find out over here under the pricing. So for FX, it's actually for FX product is zero commission, means that actually even you can enter a trade, make 1 pips, you can actually exit the trade also. So some people, right, they do scalping, means that they make a few dollars, especially for price range that are actually FX in range bound, right, they can actually do kind of scalping. And also for FX, so-called CFD account, there's actually no account maintenance fee for the CFD account. Let's say you open an account, and in case you are not active, right, actually there'll be no account maintenance fee at all. So I think if case you have any other question, right, please post under the chat. So maybe I would share some view on my some of the chart. So actually, recently we talked about USD Sing dollars. So you can see actually USD Sing dollars, right, actually has been actually supported around this level. So it has been I would say that quite range bound within this period of time. From let me open further. So actually, how to make use of chart? You see, if I try to scroll to the left, you zoom out. When I go to the right, we'll zoom in. So actually, this is how actually you use the chart also. So actually, I will see that USD Sing dollars actually has been pretty much range bound. So in case that actually this level support, right, it's possible that it can likely to test the upper region. So this, but in case you do a long position, right, you may want to put a stop loss here in case they actually break down. So I would say that USD Sing might be looking out for a swing up to actually reach the top before actually continue in the range bound position. So next thing, I'll share my view on another chart. Euros, dollars. This one is actually really a range bound. You can see resistance level, support level. So actually it has been trading inside this support range bound period. So what you want to do, you might want to consider a short position and the resistance level, do a long position at the top, then you can do a trading opportunity. So it's likely that it might slowly go up to test the top, then from there you can come down here. So remember when you're trading, right, always do keep a stop loss also. So maybe we'll be looking out for opportunity around 1.9 region to see how it tests the resistance. If there's from the resistance as the turn down, we'll actually do a short position downward. So this is for the Euro/USD pair. Next one is USD Japanese pair. So actually you can see this one has been supported by the support level. So actually this one is also known as a ascending triangle. So in case actually they continue to do Tesla and it break out, right, ascending triangle usually is I would say it's a kind of triangle we look out for trade on breakout. So when they really trade on breakout, right, you can actually expect the price to actually start to go up for the USD/Japanese pair. However, in case they break down, but I would say I will look out for any break to look out for any trading opportunity when they actually break out from the top of this pair. Let me see any other Q&A portion. Okay, so someone asked about if your account hold funds in USD and if is the account hold funds in USD, if you fund in account in Sing, how you can convert, or maybe I can rephrase your question, how to actually convert from Sing to USD. So maybe I'll show you. Let's say you have some funds, you want to convert from Sing dollar to USD. So you can actually do it under online forms. If you want to withdraw money, you can use the withdrawal. You make some money, we can directly credit back to your bank. You want to do withdrawal, let's say I have 1,000 Sing. I want to convert USD. I'll just fill up this form, I key in the password. Yeah, then the request. So because it's on the weekend, so there'll be no processing. So actually for conversion, right, it's actually processed every working day on the 2 p.m. Then for withdrawal, is actually processed on the working day every morning 10 a.m. So in case you want to do withdrawal conversion, you can do it here. If you all have any question, right, you just put a question over here so I can answer your question. Okay, someone asked what is the USD Sing dollars pair spread. Just now, okay, I would say that for weekdays, right, because for weekdays, currently the spread is actually seem higher, especially when it goes over the weekend. Let me open up first. USD Sing, USD. Okay, give me a moment. Currently it's 3.8, by right actually our spread should be actually, if you look on trading days, right, the spread is actually range around 1.5. Because for weekends all this will be actually become bigger when they actually become the weekends there's no trading, so all these spreads will become bigger. But when you do on the trading, look trading on the normal days, right, on weekdays, right, actually just now I show you, where's my, that's right, you can see actually our spread is around 1.5 pips. So I would think that I would say that one of most popular product people are trading is because USD dollars, because of the 1.5 pip spread. So actually quite a lot of people trade in the USD Sing dollars. So actually just now you mentioned that different timing, right, there'll be different pairs. So actually I would say early in the morning, usually people trade pairs is these two pairs, US dollar Japanese yen, US dollar Sing, and also the Aussie pair and New Zealand pair. Then towards the afternoon, people will be actually focusing on more of Euro and British pound pair. And in the late at night, people will be actually trading any pairs that again USD dollars. So these are the timing that these pairs will be actually more active. So and we are hoping to actually launch this Chinese yen pairs around end of August. So you can keep a lookout for the soft launch updates on points. Okay, if you want to talk about see the spread for the USD conversion, right? So actually you can conversion, you want to convert, right? You can actually see the conversion rate over here. You go to announcement tab, exchange rate conversion. From there you can see what is the conversion rate for the indicative conversion for the day. Then in case some people, because they can actually they have already US dollars, so if they want to actually deposit US dollar directly to us, you can actually do in terms of TT transfer. You just click on this, then TT details. Then this TT details. And some people, right, because there's another way, because TT transfer you have some cost. So another way, some client, right, what they want to do, they want to deposit USD to us. They have a check. They write a check to us. They deposit at the Phillip branch. From there, actually, from us, Sing dollars and USD, right, there's actually I would say that USD, right, if there's can do currency, right, actually sometimes there's no cost for Sing dollar and USD check. However, for Hong Kong, there'll be some fee involved. Whether there's a trailing stop loss on the platform. Okay, let me show you the first one. Maybe okay, FX pair we are still, because FX is still product. So currently FX, right, let me just show you okay. So actually for us we have a limit and stop limit order. That's why we are going to add the market orders and the OCO in the hopefully by next month, or if not start of October. We are doing testing already for that to make sure it's stabilized before you launch any. Then for if you're talking about stock, maybe easier. So actually when you search, let's say you just talk about DBS first. So there will be 3 DBS come out. There's CFD, DMA, so they are different. So I was like DBS. So there are more different type of order for stock, because we actually all this stock CFD has been around for I think around quite a few years, around 10 years or more already. So that's why we have a lot of orders so there's actually a trailing stop orders for that. But for the FX, we are still trying to add all these features along the way, because when we add a new feature, we need to do testing and make sure it's stabilized before actually add furthermore new features. Yeah, I'm not so far there's no other question. Is there any other question? You can put under the Q&A. If not, I think you have actually come to the end of our webinars already. I think Stop BNB, I think share about this. Yeah, just keep a lookout for our upcoming webinars where we'll share more information. I think if you are interested in the order types, right, we have the, let me go. Order type, you need to keep a lookout in the September webinar. Then in case you have any feedback for this webinar or what you want to find out more about, you have any topic that you want to find out for webinar, you can give us a suggestion under the feedback so we can keep continue to keep improve on our webinar also. Okay, how to put a stop loss? Okay, maybe I just show you. Okay, I just show on DBS, easiest. Okay, let's say I enter DBS at 21.07. So now I want to, let's say the DBS, right? Let me see the chart. Okay, maybe you look at, maybe they are looking out for potential support resistance level. There's some here. Yes. So maybe you have you want they come down to below, break this support level, then you want to have a cut loss. So maybe you just use $20 for simplicity. So let's say when it come down to $20, I want to set, this is my trigger. So once the trigger come in, right, then they'll actually help me to when trigger is triggered, then the real orders will come into the market. So maybe I'll put 19 point, put slightly a bit below a bit. So maybe I have I already long a position 1,000, buy 1,000 DBS at 21.07, and I want to put a stop loss around 19.98. This, so I'll put this is how. Give me a moment. Then subsequently, I just put my stop loss orders. So this is how actually I put my stop loss. So usually your stop loss, right? Maybe you want to put closer. This one is quite far. So usually a stop loss, right? It also depend on the counter. If the counter is actually moving, you see every time it move quite fast, right? Then you may want to put a stop loss that the limit price is further away. However, if the price movement of this counter is actually quite slow, right? Maybe we'll put closer a bit. Yeah, so actually FX, right, because it's easier. Let me go back to this. So imagine it's actually traded range bound, right? Because like for example, if we can look in terms of even go a lower time frame, 15 minutes. Because of the zero commission, let's say you see there's actually, if there's range bound also, you can actually consider doing trading opportunity. Like for example, look out quite a range bound, you can just sell at the support, buy the resistance, do a range bound trading. Because of the zero commission, right? Can even they move 5-10 pips, you can actually take opportunity really. So FX product is because of zero commission. It's good for intraday trading. Just those people just take a few dollars trade on this. However, please make use of your stop loss and also trading strategy. Yeah, I think if there's no question, we'll be ending our webinar soon. In case you have any feedback, you just help me to do the feedback. Thank you. And in case you have any question on this webinar, or you want to find out more, you can actually give us a call so I can provide more information. But don't give us a call on weekend because I'm not at home. So only on working hours that will be available. Thank you.